Let's talk about one of the most anticipated IPOs of 2025, the HDB Financial Services IPO. This is India's largest NBFC IPO to date, with a total issue size of 12,500 crore rupees. This includes a fresh issue component of 2,500 crore rupees and an offer for sale component of 10,000 crore rupees. The price band for this IPO has been set between 700 to 740 rupees per share, and the issue will remain from 25th June to 27th June. At the upper end of the price band, the valuation for HDB Financial Services implies a market capitalization of 61,300 crore rupees. Further, the IPO pricing did come as a surprise to investors, given that unlisted shares of HDB were trading at around 1,200 to 1,250 rupees per share just before the IPO announcement. Also, it's important for investors to note that this listing is not just a milestone, it's a requirement by the RBI. This IPO helps HDB Financial meet RBI's mandate for certain large NBFCs to list by September 2025. So what exactly is HDB Financial Services and why are we talking about it? Well, the firm is a subsidiary of HDFC Bank and is one of India's fastest growing NBFCs, serving almost 2 crore customers. The company focuses on low to middle income households, especially the underserved and the underbanked segments, many of whom have little to no credit history at all. With around 1,700 branches across 31 states and union territories, over 80% of its branches are outside the country's top 20 cities. Its loan book stands at over 1 lakh crore rupees, growing at a CAGR of nearly 24% over the past 2 years. Around 73% of its loans are secured, offering a relatively safer lending mix. Its growth is supported by financial inclusion initiatives, and it offers 13 lending products across enterprise lending, asset finance, and consumer finance. Now, while HDB Financial runs independently, it does enjoy the strong parentage of HDFC Bank, which is India's largest private bank, as we all know. This backing helps the NBFC access lower cost capital, strong credit ratings, and the trust of HDFC Bank's brand. As of now, HDFC Bank owns about 94.6% of the company. The bank will offload a significant stake to meet SEBI's minimum public shareholding norms, bringing its total holding below the 75% mark post-listing. Operationally, HDB has delivered a strong performance between FY21 and FY25. It maintained an average net interest margin of about 8% and grew both earnings and assets under management at a healthy clip at 41% CAGR and 15% CAGR respectively. Even with higher credit costs, averaging at about 3%, the NBFC managed to deliver solid returns, with return on assets over 2% and return on equity above that 14% mark. And that momentum is expected to continue. In the current fiscal year, that is FY26, the dip in the cost of funds will support margin expansion and drive the ROA improvement. So how does HDB Financial stack up against its peers? While with revenues of over 16,000 crore rupees, HDB Financial ranks in the mid-tier among leading NBFCs. It has a strong earnings per share of 27.4 rupees and a return of equity of nearly 15%, better than many but a little bit behind Bajaj and Chola Finance. At a price-to-earnings ratio of 27x, it's priced more reasonably than Bajaj or Chola, yet higher than Shriram Finance. One key risk for investors to note is that the RBI's draft circular, issued on October 4, 2024, is aimed at eliminating any overlap in core business activities between a bank and its group entities. While if the draft circular is implemented in its current form, HDFC Bank might have to significantly reduce its ownership in HDB to less than 20%. Well, even despite this, most analysts and brokerages recommend that investors subscribe to the issue. They say that HDB Financial Services is one of the largest NBFCs in the country, and the company is well placed to register healthy growth going ahead while witnessing an improvement in the asset quality. Further, they all agree that the valuations of this IPO are fair as compared to its peers. So what do you think? Will you be subscribing to this issue or giving it a mix? Let us know in the comments below, and as always, stay tuned to Moneycontrol.com for more news updates.